Joining us now on the show is Peter McGuire. He's CEO Exim Australia. Peter, hi. Thank you so much for taking time. I want to start with the crude oil prices first because we've seen very volatile each day of this week, which is also beginning of a new month, up nearly 2% for this week already. What is the sense that you're taking from the OPEC and allies' latest increase in production for the month of July and August, even as it is an increase? Do you see skepticism as a point because OPEC, even with lesser quotas, has not been able to keep them?
Well, exactly right, Manisha. Yeah, it's been an incredible week, first off, as far as volatility. If you're looking as far as the production increases, 50% bigger than the previous months, but they're bringing that forward from September. And the other side, of course, is Russia's still keeping its quota share and many countries are falling behind target. So it's 648,000. Let's see if that is enough to satisfy the global demand.
Peter, we have seen a reaction yesterday after this news came in. The prices there was a knee-jerk reaction on the higher side. It hasn't been able to hold there, but we still are holding at 116, 117. Would you say that with the kind of demand that we're looking at, supply not getting there, there is still a risk-reward on the higher side when it comes to crude?
I think so, absolutely, Manisha. Put your mind back earlier in the week, we were at a 123 handle. I couldn't believe it. It just booted through 120, 121, 122. We were nearly at 123, and then all of a sudden nearly $10 was wiped off. And now we're up back at 117 from that 113. So, yeah, incredible volatility, huge movement, and I wouldn't be surprised to take it back up there of, 122, 123. It'll test higher from here. Let's just wait and see how much further oomph it's got.
The other thing is that the OPEC and allies' current agreement expires in September. What are we looking at in sense of new negotiations, especially with Russia embroiled in all of this conflict and sanctions?
Oh, look, it's very hard to speculate as far as, where it's going from here. I think we're going to see price uncertainty. I feel as though we're going to see strong demand over that summer driving season as far as US demand and global demand, Northern Hemisphere. So there's the first part. Lead us into September, 3 months out, and how OPEC manage this, they may have to dial it up further from 648,000. They may have to, if demand's strong, Manisha, you may need an extra 1 million barrels. So let's just wait and see where we are. You can't rule out consumption.
Fair point that. This is another week where we also are looking at the metal prices holding firm. I mean, we did see aluminum go down all the way to those 4-month lows. Copper went down to multi-month lows as well. But with the kind of rebound that we've seen finally coming in, how sustainable is this?
Well, I think it's sustainable. Remember, you've seen that US dollar, we're sitting at a 101.70, back from that 104.50 sort of number. So it's given up a fair bit of steam, the US dollar, and that's been a nice little push up as far as your base metals. And they're well off what we saw, 36, 37, 3,800 for aluminium. You're still at that, I think, 26, 2,700, and copper's not doing that. It's come up, but it's got a long way to cover if it wants to get back through 10,000. So I'm just looking over the next couple of weeks, get more or less a mood and try and understand market sentiment.
So, Peter, are you saying that the crude oil prices are firm and we might see metals catching up on the higher side? So we're not looking at commodity prices go for further declines from here?
Well, I wouldn't have thought so, Manisha. I mean, that's going to be the catalyst. If you see crude prices push up from here, I think that'll take base metals up with it. So let's just wait and see where the overall theme takes us. But yes, I would say higher prices from here for crude, unfortunately, in the short term.
And we also are looking at the precious metal prices gaining in tandem. Is it the inflation? Is it safe haven? Is it 100 days of Russia-Ukraine war? What are you giving that to?
Dollar come off. We're back at 1870 for gold. So it seems to be, it goes from 2,000 back to 1,800. We've discussed that many times. Then it goes back up and then it comes down. And it's on a little bit of an upward trend at the moment. If that US dollar comes under a little bit further pressure to the downside, then I wouldn't be surprised at, maybe a 1,900 handle when we're only $30 short.
But are you looking at 2,000 plus kind of levels yet again in this year?
Oh, I think it'll happen. We've got 7 months to run. It's a long time, as you know. I mean, 7 months is, well, anything's possible this year. I want to see what goes on with China lockdowns, what's happening with Ukraine and Russia, and the overall geopolitical concerns. So, yeah, I think that there's every chance that you'll be back at 2,000. I'll keep an eye on where the US dollar goes.
And where is the US dollar going? Because we have seen some profit taking onto this one. I think it has been factored in on what the US Fed might do in the month of June and July. The interest rate hike, 50 basis points is what the markets have factored in already. Is that what the dollar also working with?
Well, a lot of that good news has already been baked in. I think it was baked in at that 104. It's given up that Manisha, the hot air's come out of it. That's where it's back at 107.70. So I wouldn't be surprised to see a little bit further softness, but a little whipsaw again because it's given up. So, yeah, hold on to your hats. It will be a bumpy ride for that US dollar index. It'll be choppy and a trader's delight, Manisha.
Well, absolutely. Well, the month of May did see profit taking across commodities, and many of them looks like June has started on a positive note. As Peter says, these are perhaps buying opportunities returning for many of those commodities in the very near term. Thank you so much, Peter, for joining.